You just hit the button and you ended up in the right place at the right time. Let me just show you. Key is, watch this. Price action starts to pump here, doesn't it? See? Price action got oversold. It pumps, it pumps, it pumps. I just want to show you these anomalies. Pay attention. It happened here and it happened here. Stay with me right now. The insight I can give you is going to change your life forever. Look at this. Oversold stochastic. Oversold stochastic. Yes, we had a pullback, but where do we pull back? Only to that previous little tight resistance. And you would say, oh, a huge dump is coming. We're super extended. We're in a bear market. That's a fake out. We're going to head up lower, right? We're not, that was our bottom. The divergence called it, and we got our push to the upside. We came back with the bounce here. The bounce, right? And then we were gone. Look, the stochastics would funnel lower, which this is an anomaly. Look, stochastics funnel lowers here. Price funneled lower. Stochastics funneled lower here, price funneled lower. Stochastics funneled lower here, price funneled lower. Same thing, look. So 90% of the time, you're going to be right. Can you guess the anomalies? That's what I'm here for. I'm going to step in at certain days, certain times, and I'm going to be able to show you things that you never thought even possible, and everyone else is not going to be able to see this. You're going to have an edge on the market because you came to the live stream. So look, it came back and bounced. If you didn't know your support or resistance, you may have been played, okay? Also, the 21 crossed 50 and the 80. And, so that was a big sign. When you see a smaller moving average begin to cross, that's a preemptive golden cross. Look, a golden cross came. So after the 21 crossed the 50 on August 4th of 2021, you can see the the golden cross came about a month and 13 days later. You see? So these are preemptive ideas. And someone said, why do you use all the moving averages? Because when smaller moving averages, shorter, I call them shorter because the 21 is a shorter day period of average, crosses the longer one, the 50 and the 80, I'm getting insight. So look, didn't the stochastics funnel down and price funneled up, did it not? This is the anomaly that I want you to understand. This can happen. Here it happened again. Price would funnel up while we would funnel down on the stochastics. And you're like, but Sam, you use the stochastics RSI. You say to short the overbought every single time. I do. But how did you get out of this? How would you have figured this out? You would have switched to the smaller time frames. What I'm teaching you right now is gold, like absolute gold. You would have switched to the smaller time frames. Let's go find that same area on a smaller time frame. Stay with me here. Stay focused. Most people are going to lose focus. They're not going to get the insight. Stay with me. Turn off all the other distractions. Really hone in with me right now. Honing in is how you're going to win. So look, if we zoom back into the smaller time frame, you would have played this flag to get on out, right? Even though it told you the daily was done, and this flag would boom on out. Then look, this flag would make a move to the upside. You would come back and retest, but you would have made this flag, which is kind of a shallow, I call these shallow cup and handles. Shallow ascending. It's an ascending cup and handle. See, it's moving to the upside, and then you would have taken the measured move, and boom, that cup and handle would have had you at a low. Had you just taken this little move, which was the length of this base. So by trading smaller time frames and sticking to the tiny patterns at hand, and at this point, the daily was telling you you're going to dump. It's over. You had bearish divergence. It wasn't good. But had you just stuck to your guns on the smaller time frames, you would have found your way. Okay. Now, eventually, it's going to come. The piper is going to come. How do you know that? You skip the daily and you go to a bigger time frame, like the 3-day. All right. Now let's look at this. What was going on in the 3-day at that time? The 3-day was extremely extended. The 3-day started to show you bearish divergence. Also, I eventually caught a bearish divergence here on the weekly time frame, and I knew that we had a move to the downside coming. Also, the moving averages started to get far apart on the weekly. So sometimes you can't use one time frame that you've used many times. You have to bounce around with the knowledge that you know all around, because this insight is so key. All right.